Welcome back to my more important analysis videos with me, Rich Market Analyst at Hantec Markets on Monday, 4th of June. Let's look at euro dollar, which is picking up, isn't it? It's certainly broken that downtrend that it's been in for the past sort of 4, 5, 6 weeks. And a strong move higher on Wednesday sort of started off the ball rolling, but it's continued to improve today. Now, this is now, I think, at a key level because you've got confluence resistance. 1715 to 1735, I'll zoom out here and you can see 1715 were these lows from November and December. 1735 is the long-term Fibonacci retracement of the massive euro sell-off. So that is key resistance overhead, and as you can see here, it certainly seems as though that last week they were a barrier to the recovery. Last week 1724 and then 1717 were the highs on Thursday and Friday, and today we're seeing 1715 bang on as the high. It is testing these levels, but look at these momentum indicators. The MACD lines crossing higher, RSI up at sort of almost 40. That is a multi-week high, and also the stochastics confirming that RSI improvement as well. So there is an improvement going on. Can it break out above this sort of overhead resistance? If it can move above and close above 1735, then 1820 comes back into the equation. 1820 being old support that becomes new resistance. So there is an improvement, and there is room for an improvement as well, because the reaction or the rally highs tended to get towards 55 to 60 in March and April before falling away. So there is room to unwind, and yeah, there is certainly again room on the MACD lines to pick up. So I think that if we can sort of start to clear this resistance band 1715 to 1735, then there is definitely the prospect of a recovery. Now we're seeing 1615 as Friday's reaction low, following on from in the wake of non-farm payrolls, and then the market has recovered since then. So there is more of a positive configuration, as you can see on the hourly chart, having gone previously throughout the sell-off sort of 30 and below throughout May really. We're now finding the RSI sort of bottoming around the 40 mark, MACD lines picking up around neutral. So this would suggest that there has been a change in sentiment, I think, on this. And it will be interesting to see if a rally sort of back towards this sort of 16, I'd sort of change that to around 1640 in these lows. That's an old level. So it's around 1640 seems to be a key basis of support. Obviously that had that spike low to 1615, but on a near-term basis, certainly you've got a bit of a pivot around 1640. So any sort of rebound that, any slip back that finds support above that and pulls back higher, I think that is a decent sort of basis of support coming back in. 1725 on the hourly chart needs to be a breakout level, but there is sort of overhead supply that we need to get through. But certainly, I think there is an improvement on these hourly indicators. So I wish you good luck in your trading, and I'll speak to you later.